Amazon Q2 2025 earnings, stock drops despite beating expectations. AI AWS ad growth explained. Brace yourself. Amazon just delivered a financial roller coaster. Headline-grabbing profits on one hand, a gloomy outlook on the other, sending the stock into a swift after-hours dive. Curious yet? Keep reading, because this is where the numbers get fascinating, and some would argue, a little unsettling. First, the good news, and it really is good. For the April to June quarter, Amazon reported earnings of $1.68 per share, handily beating Wall Street's $1.33 estimate. In plain English, that means the company generated 35 cents more profit on every share than analysts had penciled in. Revenue told a similar story, $167.7 billion versus expectations of roughly $162 billion, about $5 billion extra rolling through the door. Sales rose 13% year over year, an acceleration from the 10% growth logged in the same period last year. But here's where it gets controversial. Management's forecast for the current quarter landed between $15.5 billion and $20.5 billion in operating income, below the $19.5 billion consensus at the midpoint. Investors instantly questioned whether Amazon's massive artificial intelligence spending spree, pegged at up to $100 billion for 2025 alone, is stretching margins too thin in the short run. Digging into the segments reveals an even more nuanced picture. Amazon Web Services, AWS, booked $30.87 billion in revenue, a solid 18% jump and a hair above forecasts. Still, that growth trailed Microsoft Azure's 39% and Google Cloud's 32%. Is AWS losing its edge, or simply taking a strategic pause while shifting resources to generative AI tools? You decide. Advertising continues to sparkle. Ad revenue climbed 23% to $15.69 billion, overshadowing expectations by nearly $0.8 billion. For context, Meta's ads grew 22% and Google's 10% in their latest quarters. If Amazon is the third largest digital ad platform, some wonder how long it will stay only third. Core online store sales reached $61.5 billion, up 11% and ahead of projections, while third-party seller services rose the same 11% to $40.3 billion. That means marketplace fees and services are now two-thirds the size of Amazon's own product sales, a dramatic shift from a decade ago. CEO Andy Jassy spent the post-earnings call assuring investors that AWS retains a pretty significant lead in cloud computing and that recent AI launches will unlock fresh revenue. He also acknowledged recessionary fears and potential fallout from tariff and trade policies, but insisted that so far, price tags haven't gone up and customer demand hasn't fallen. His pledge, if costs end up being higher, we will absorb them. Bold words, given the size of the AI budget. Future guidance calls for total revenue of $174 billion to $179.5 billion in the third quarter, equating to 10 to 13% growth. That midpoint is a hair above the street's $173.1 billion forecast. But clearly investors want more than mid-single-digit upside when the price tag for next-gen data centers is skyrocketing. And this is the part most people miss. Amazon's stock initially rallied on the headline beats, only to slump more than 7% once management's cautious tone sank in. It's a reminder that in tech, tomorrow's story often matters more than yesterday's victory lap. Provocative takeaway. Could Amazon's AI arms race end up eroding its legendary operating discipline? Or will it unlock a new wave of hyper-profitable services that dwarf even AWS? Some argue the company is simply repeating its invest ahead of the curve playbook. Others worry the curve might be steeper and pricier than ever before. Your turn. Do you believe Amazon's staggering AI investment will translate into faster growth and higher margins? Or is the market right to be skeptical? Should AWS be worried about Azure's and Google Cloud's scorching growth rates? Sound off. Agree, disagree, or raise an entirely different angle. Let the debate begin. Amazon stock plummets 7% after earnings. AI concerns, murky guidance explained. Amazon's recent earnings report has stirred up quite a buzz, particularly as the company's stock took a significant hit due to uncertain profit forecasts and increasing competition in the artificial intelligence AI sector. On Thursday, shares of Amazon plummeted by 7% in after-hours trading, raising eyebrows among investors and analysts alike. Despite surpassing expectations for the second quarter, Amazon's outlook for future profits was less than reassuring. The tech giant reported a 13% increase in net sales, totaling $167.7 billion for the quarter ending June 30th, which was higher than the $162 billion that analysts had anticipated. Additionally, Amazon's earnings per share, EPS, of $1.68 far exceeded the expected $1.33, showcasing the company's strong performance in the short term. However, the mood quickly soured when Amazon projected its operating income for the upcoming third quarter to be between $15.5 billion and $20.5 billion, which fell short of the analyst's average estimate of $19.41 billion. This lack of clarity regarding future profitability has left investors feeling uneasy. During the earnings call, CEO Andy Jassy faced questions about Amazon's strategy in the competitive AI landscape. His responses were lengthy and somewhat vague, failing to provide a clear picture of how Amazon plans to maintain its edge in AI technology. While he expressed optimism about the growing adoption of AI, he did not articulate a strong competitive advantage for Amazon in this rapidly evolving field. The aftermath of the earnings call saw Amazon's stock drop by 7% in after-hours trading, reflecting the market's reaction to the uncertain guidance. Jassy also addressed inquiries regarding tariffs, noting that the company had not experienced significant impacts in the first half of 2025. He pointed to the success of Prime Day as evidence that consumer demand remains robust, despite potential tariff-related costs. Here are some key takeaways from the earnings call. Jassy emphasized that Amazon has not observed major shifts in customer demand or price increases due to tariffs thus far this year. The company is actively promoting Alexa Plus, an enhanced AI chatbot designed to perform more complex tasks. Amazon is also developing Project Kuiper, a satellite internet service aimed at competing with Elon Musk's Starlink. When questioned about AWS's position in the AI race, Jassy provided a lengthy response that lacked specific details, but conveyed his belief in the potential of AI as it becomes more mainstream. As the call concluded, Amazon's stock was down 7.4%, reflecting the cautious sentiment among investors. Jassy was pressed on whether AWS is lagging behind its competitors in generative AI, but his answers did not provide the clarity that analysts were hoping for. In discussing Project Kuiper, Jassy noted that Amazon is positioning itself as a serious contender in the satellite broadband market, highlighting price as a potential differentiator. He acknowledged some delays in the project, but assured that a commercial beta version would be available soon. Furthermore, Jassy hinted that Alexa Plus might eventually incorporate advertising or subscription models, enhancing its functionality beyond what current chatbots offer. He also identified electricity supply and chip procurement as significant challenges for AWS as it expands its AI infrastructure, suggesting that these issues could take several quarters to resolve. When asked about tariffs, Jassy expressed uncertainty about who would ultimately bear the costs, although he reiterated that Amazon had not yet felt a significant impact. He acknowledged that this situation could change in the latter half of the year. Jassy reiterated his belief that the majority of IT spending still occurs on premises rather than in the cloud, but he anticipates a shift as more businesses adopt AWS, particularly for AI applications. He highlighted new AI initiatives at Amazon such as Agent Core, which aims to simplify the development of custom AI agents for users. While Prime Day did not fall within the second quarter, Jassy mentioned that it had driven record sales and new Prime memberships, marking it as Amazon's most successful event to date. In summary, while Amazon's second quarter earnings exceeded expectations, the company's vague profit guidance and concerns about its AI strategy have left investors anxious. As the tech landscape continues to evolve, the question remains, can Amazon solidify its position in the competitive AI market, or will it struggle to keep pace with its rivals? What are your thoughts on Amazon's future in AI? Share your opinions in the comments.